Hey everybody, Tim Knight here. Hate to start the video off with a guiltogram, but honestly I am faced with a decision of whether to keep Slope free and ad-based or whether I should just make it subscription-based for a smaller audience who pay a fee each month. I'd really rather keep the large audience, but it ain't going to happen if the ads don't get clicked, because traffic is real strong and revenue is just kind of eroding a bit. So if you see an ad that is of interest to you or you're curious about, please take a moment to click it and check it out, because that's the only way the blog makes any cash. So enough of that. Turning our attention to the charts. This one bar made all the difference. Last night the euro was on the rise and the ES was on the rise, and it was up like 9 or 10 points. The ES was up 9 or 10 points sometime last night when I stopped checking. And I woke up this morning and the euro was down and the ES was down. Kind of a nice change. I guess, it's this stupid euro drama still going on. Some German dude muttered something about maybe it won't really happen or God knows what. I've stopped caring. But just, someone glances sideways wrong, and that's all it takes these days for the euro to get pushed. And that's what happens. So it made for a good day. Made for a real nice day. This is an important line, though, for the euro dollar. 1.3937. If we can stay below this, that's good. If we get above it, it's not the end of the world, but it would mildly suck. I'd like it to stay below that. Right now, again, the euro drama, they said they're going to solve everything by the weekend, which is interesting. Hey, maybe we can solve the debt crisis here in America in 2 weeks, because it's big. It'll take more time to get $15 trillion of cash together. But maybe they won't work out something that the market likes very much. Who knows? The weekend should be an interesting one. But no matter what, if the euro can stay weak, then we bears are going to have an easy time of it. If they come up with something the market embraces and accepts as wonderful and glorious, then the only bears that are going to be happy are the bond bears. So we shall see. Let's look at some daily charts, and I want to emphasize what I'm going to call relative behavior. It sounds a bit like relative strength, but it's a bit different, and hopefully as I go through this you'll see what I'm talking about. But as we saw the strength of the past couple of weeks, different markets, they all went up, but they went up with different amounts of vigor. And I think that it's telling how some markets were weaker when things were weak and were less strong when things were strong. In no particular order, let's start going through these, and I'll make a comment here and there about that kind of idea. Here's the NASDAQ composite down about 2% today. The NASDAQ in general has been substantially stronger than anything in the past few months that we've had our ups and downs. We've made a series of higher highs, yet they're all beneath that important trend line right there. So the easy money, as it were, was made shorting on Friday near the close, because this sort of orgy of buying, which God knows what the basis of it was, but the orgy of buying really came to a climax, as orgies often will, at the end of trading on Friday. And today we had a bit of a softening. Now here's a different chart that I find perpetually interesting these days. Keep bringing it up, but it merits bringing up. This is my gold GDX analog. So huge rally to the peak marked in blue, trading range, higher trading range, collapse. Huge run up to the area marked in blue, trading range, move up to higher trading range, and boy, a collapse would be nice. Now, it's not a perfect analog because this pattern doesn't resemble this pattern except in as much as it's a range. This is a stronger range. You can see this through this series of higher highs, whereas this is more of a topping, one might even say head and shoulders type pattern. So I recognize the difference. But this midline, if we can stay below it and even better, break beneath this, I think will be all that it takes. GDX, incidentally, matches this whole thing quite nicely. And so I'm short GDX right now with a stop at 58.01. The red line's at 58.5, but I've got a tighter stop set on that, so 58.01 is what I'm using. The Indu Dow 30 was down about 250 points today, and this brings up an example of the relative behavior I was talking about. You'll see I've got, in some cases, 2, 3, even 4 horizontal lines on some indexes showing how it couldn't quite muster its way back to certain levels. You'll see when we get to energy how it wasn't nearly as strong. But if we continue to descend, obviously the bottom of the range is like 10.6, and one of these days we'll break out of this big range, and when we do, it'll be pretty big news. I think it'll move faster if it gets beneath the range. If it gets above the range, I think it'll just be really fighting some serious gravity. I don't think you're going to see the Dow move up 500 points in a day or two, although given Europe's insanity, maybe. Russell 2000. Now, this has not been nearly as strong in recovering as some of the bigger cap ones. So the breakdown here was like at 770. We are way below that, even with the ridiculous, stupid 2-week rally we just got over. We are still way below those levels by about 10% just from the breakout, and way below the highs. I don't even know what that percentage is right now because I don't want to bother. But the small caps have not had anywhere. It bounced more because it was so completely trashed. But in terms of peak to present, bigger difference. And I think they'll continue to be more vulnerable. And transports is another good example of something that really hasn't had the strength of some of the bigger caps. Look at this one. I've got these 3 horizontal lines. The breakdown on the transports was way up here of over 5,000. Even with retard rally, we got to 4,700 before dropping today. So this is what I'm saying in terms of if we weaken, I think that things like this, which couldn't get quite back to where they had fallen, will be that much weaker during a subsequent tumble. Now, I had mentioned oil. Let's look at dollar OAX. This is the SIBO oil index. Nice example here of a very weak hand. Broken the trend line, so it's really tipped its hand as far as the direction. Fought its way back up, not nearly back to the breakdown level. If it weakens, I could see this getting back down to the lows of summer 2010. A good instrument for this OIH has a similar looking graph. This has been quite fascinating the past couple of weeks because we had a gap. So fall, close the gap, big tumble, push its way higher, past the gap, and right to the underside of that broken trend line. And so this is a pretty nice short, long as we stay below 1, 2, 2, 3, 4. Kind of a nice little sequence there. Very pretty short there. So in a weak market, I think that this could go, certainly back in the double digits, and even beneath where it was earlier in the month. As far as precious metals go, we looked at GDX earlier. You would think that with kind of the currency crisis and so forth, that precious metals would be going gangbusters. I think the whole precious metals bonanza really ended this summer. I think that was the last hurrah for a while, at least. I mean, next year maybe we'll lay the groundwork for the mega bull rally that some precious metal bugs have been dreaming about. $5,000 gold and so on. As it is now, I think the mania ended in the summer, and these are very, very vulnerable. I'll say it again, very vulnerable. We had today a nice bearish engulfing pattern on this. Let's zoom in a little tighter here. On gold. Now, so what? You know, we had one here too, and it just went higher. So it isn't something you want to stake your life on. I've been either not participating in precious metals or lightly. I've got a small short in gold. I've got a small short in GDX. And I even have a small short in silver right now. Were GLD to pass above 164.16, I would lose interest because there's a lot of air right here. I think if we got a gold rally, it might move swiftly up by $100 on the spot market. Silver, I mentioned I also have a short position on. Silver being more vulnerable, I think, than gold. And my stop on this one, a tight stop for me, I think at 31.64. A little bit looser stop would be like 31.97. Above 31.97, I think, would be quite dangerous. But again, lots of air here. Now, interest rates and bonds and so forth, this is a big question mark. This sounds dumb, but it totally depends on equities. I mean, if equities continue soft, I think that we could see interest rates soften and therefore bonds get stronger as they did for so long. If, however, today was a one-hit wonder, then we could see the resumption of that bond sell-off, which lasted pretty much almost every day of the past 2 weeks, or the prior 2 weeks. I think something like 7 out of 8 days, or 8 out of 9, or something impressive like that. Interest rates, I can go back for all time on this, and interest rates on this are lower than anywhere in the database. I mean, this goes back to the John F. Kennedy administration. And these are, I mean, just look at this. Look at what, you talk about a bear market. The bear market in interest rates has been going on for 3 decades, I believe. 3 decades. Wow. Pretty amazing. And just to wrap it up, let's take a last peek at the E-minis. So here's the NQ. It was down when I started this video. It's up a little bit right now. Not surprising. Had a big reversal. And so not surprised to see a 0.03% recovery there. And then as far as the ES goes, this one is still down. IBM came out with earnings which sent their stock down about 3.5%. If we back this up to past 4 months or so, you can see here the range. And if we zoom in on this little trend line here was broken today at about 5 in the morning or so. And therefore, a recovery on this, there's lots of room for this to recover without passing the baton to the bulls. So those who are very short-term horizon traders, probably be nice to be out right now because this may bounce. But, you know, I've got a lot of shorts on right now. I don't mind that. I wouldn't mind if this went up a little bit. But we're taking it day to day. This whole Europe thing will be over in a week, maybe 2 at the most. I'm more tired of this than I was of the Greek vote thing. It's sort of funny too, thinking about the whole Greek vote back in May. How that, oh well, this will wrap it. That didn't wrap up anything. That was chapter 2 out of probably a 500 chapter book. So maybe I'm being naive and thinking that this weekend is going to end the Europe thing. This is maybe chapter 37 of a 500 chapter book. We can always hope, though, can't we? It'd be nice not to be distracted by this nonsense. But the big news tomorrow, of course, will be Apple's earnings. Google dazzled everybody last week. Maybe Apple will dazzle everybody tomorrow. They'd better, because Apple is known for dazzling. And all indications are they're doing as sensationally as ever. But if there's any indication of anything that's not dazzling, whoo-wee, because the stock market is Apple. And Apple is holding this market up, my friend. So that is it from me. And to anybody short Crocs out there, congratulations. To anybody long Crocs, well, I guess that's your new choice in footwear from now on. So I will be out of here, and sayonara.